As global awareness of the negative impact of human activity on the environment grows, there is an increasing emphasis on reducing greenhouse gas emissions. One way to achieve this is through the implementation of a carbon tax, which is a fee levied on the carbon content of fuels burned for energy. The purpose of a carbon tax is to discourage the use of fossil fuels and promote the use of cleaner, renewable energy sources. The concept of a carbon tax is not new, and it was first proposed by British economist Arthur Pigou in the early 20th century. The underlying principle of the tax is to provide a financial incentive for individuals and businesses to reduce their carbon emissions. Although the implementation of a carbon tax can be controversial, with some arguing that it may increase living costs and harm the economy, others believe that it is necessary to combat climate change. The effectiveness of a carbon tax is dependent on various factors, including the level of the tax, the industries affected, and the availability of alternative energy sources. Despite the controversy surrounding carbon taxes, several countries, including Sweden, Denmark, and Canada, have implemented them, as well as some states in the United States. The goal of a carbon tax is to reduce greenhouse gas emissions in an economically efficient and socially equitable way. It is clear that urgent action is required to tackle the threat of climate change. Carbon emissions are the result of human activities such as burning fossil fuels, deforestation, and industrial processes. These emissions lead to the accumulation of greenhouse gases in the atmosphere, resulting in global warming and climate change. Carbon pricing is an essential tool to reduce carbon emissions. It puts a price on the carbon content of fuels and products, making it more expensive to emit carbon. This incentivizes individuals and businesses to reduce their carbon footprint. Let's look at the pros of carbon tax. Carbon tax creates an incentive for companies to reduce their carbon emissions. By putting a price on carbon emissions, companies are encouraged to invest in cleaner production technologies, which can lead to lower operating costs and increased competitiveness. For example, British Columbia introduced a carbon tax in 2008, and since then, the province has seen a significant reduction in greenhouse gas emissions while maintaining economic growth. A carbon tax can help to promote innovation and technological advancements. By incentivizing companies to reduce their carbon footprint, they are encouraged to find new and innovative ways to reduce emissions. This can lead to the development of new technologies that can be used to reduce emissions in other industries, creating new business opportunities and economic growth. One of the main environmental benefits of a carbon tax is that it encourages the use of renewable energy sources such as wind, solar, and hydropower. When fossil fuels become more expensive, it becomes more cost-effective to invest in renewable energy, which leads to a reduction in greenhouse gas emissions. Other benefit of a carbon tax is improved public health. A carbon tax can lead to a reduction in air pollution, which is a major cause of respiratory illnesses such as asthma and lung cancer. For instance, British Columbia, Canada, introduced a carbon tax in 2008, resulting in a significant reduction in air pollutants and a decrease in hospital admissions due to respiratory illnesses. Like pros, there are some cons of carbon tax as well. Let's look at each of them. One of the most significant economic costs of a carbon tax is the impact it may have on the prices of goods and services. As businesses are forced to pay more for energy, they will likely pass on these costs to consumers, resulting in higher prices for goods and services. This can lead to a reduction in consumer spending, which can have a negative impact on the economy. Other one is potential social cost. Studies have shown that low-income households spend a higher proportion of their income on energy and transportation. They would be disproportionately affected by a carbon tax. This could lead to a widening of income inequality and social unrest. One concern is that a carbon tax could harm the competitiveness of certain industries, particularly those that are energy-intensive and trade-exposed. In countries where carbon pricing is not yet widespread, this could put these industries at a competitive disadvantage. For example, in the United States, some argue that a carbon tax could hurt the competitiveness of the manufacturing sector, which is already facing challenges from global competition. Let's say if we want to design a carbon tax, we should consider the following aspect. Identify the objective of the carbon tax. Determine the tax rate. Determine the coverage of the carbon tax. Consider exemptions and rebates. Monitor and evaluate the carbon tax. Economic impact of carbon tax, which includes analysis of the potential economic impacts of carbon tax and mitigating economic impacts of carbon tax through policy. Let's conclude climate change is a global issue and a carbon tax has been proposed as one of the solutions to reduce greenhouse gas emissions. It is a fee imposed on the carbon content of fuels burned for energy with the aim of discouraging the use of fossil fuels and promoting renewable energy sources. A carbon tax has been implemented in several countries worldwide, but its effectiveness depends on the level of the tax, the affected industries, and the availability of alternative energy sources. A carbon tax can create incentives for companies to invest in cleaner production technologies and generate revenue for funding sustainable initiatives. However, there are concerns about the potential economic and social costs, such as the impact on prices of goods and services, employment, and fossil fuel-reliant industries. Designing a carbon tax involves considering several key elements, including the objective, tax rate, coverage, and exemptions. Governments can mitigate the economic impact by implementing policies that provide financial assistance and incentives to affected industries and low-income households. It is clear that action is needed to address climate change, and a carbon tax is one of the proposed solutions with varying effectiveness. If you like the video above, please share with your friends and family.